In the world of investing, one of the key metrics to consider is the operating cash flow. However, the operating cash flow is different on a company to company basis. So the question becomes, how is it that you can compare the operating cash flow from one company to another? In this video, I'm going to share with you everything that you do need to know about the operating cash flow per share calculation, which will allow you to make better investment decisions and better compare companies across their operating cash flow. Okay, so before we get into the actual calculation, I just want to give you a little walkthrough as to what the operating cash flow per share is. So the operating cash flow per share, also known as the cash EPS, is a very simple metric to calculate, but at the same time it's quite powerful for stock analysis. The formula, in this case, you can see it right here. So all you need to do is take the operating cash flow of a particular company and you divide it by the number of shares outstanding. So what we're gonna do is I'm gonna first walk you through what the operating cash flow is, and then we're gonna go into the formula, show you some practical examples and how you can use this number so that you can make better stock investment decisions. So the first thing that we're gonna do is I'm just gonna pull up the financial statements for Apple, and I'm gonna use Y-sheets in order to do this. So we're gonna do this on an annual basis. We can also do this on a quarterly basis as well. Click on get data. Right away, we're gonna get all of the financial statements, key metrics for the company on a historical basis. What we're looking for in this case is the cash flow statement. This is where you can find the operating cash flow. So another word for the operating cash flow is the net cash provided by the operating activities. And this basically means from the regular operations of the company, how much money did the company make? So in this case, this is quite a simple number to calculate. Typically, the way that is done is that you take the net income of the company and then you add up, subtract all these different accounts to see what the balance of the operating cash flow is. So once you have this operating cash flow, then you can do the calculation itself. Okay, so now what we're gonna do is we're gonna calculate the operating cash flow per share for Apple in 2022. And by the way, you can also calculate this number on a year-to-year basis, so in this case for all these different years, or you can also do it on a quarterly basis, a TTM basis. It is really all up to you. In this case, we're gonna do it the simple way, which is to do it on an annual basis for 2022. And so the way we would do it is quite simple. We would take the operating cash flow, so in this case we can just create the answer here, equals operating cash flow, and then divided by the shares outstanding, which we can find on the income statement. So right here, I'm gonna zoom in. So right here, we can see the weighted average shares outstanding. We can also do this or the diluted number. It is all up to you. In this case, what I recommend for the most part is to use the shares outstanding. Without the diluted part, click on enter. And as you can see, this would be the operating cash flow per share for Apple in the year 2022. The thing to remember here is that generally companies that have a higher operating cash flow per share are better off than companies that have a lower operating cash flow per share. And the reason why is because they're generating more operating cash flow on a per share basis, which means they can use this money to invest in new innovations, expanding into new markets, hiring new people, versus a company that has a low cash flow per share, has more limited investment opportunities that they could exploit to continue to grow and expand. Okay, so now I want to give you a practical example of the value of using the operating cash flow per share. So one of the best things that you can do about the operating cash flow per share is to calculate it across different companies that are in a similar industry. So in this case, we have a whole bunch of companies. Let's imagine that they're all in the same industry. Some of them might be, some of them may not. So in this case, I believe these are pharmaceuticals. So what we're gonna do is, rather than calculate this metric manually, we're gonna use the help of a tool, Y-sheets in this case, and we're gonna use the WISE function to be able to get us the operating cash flow per share automatically. So in this case, you can see right here, this is the WISE function. You can see kind of how it works here, and I'm gonna walk you step by step through how you can do this. So we're gonna enter equals WISE. We're gonna select the symbol, the parameter, which is going to be the operating cash flow per share. You can click here to see what data is available per each function, and then the period, which in this case we're going to do TTM. So TTM is one of the best periods that you can use to compare companies. You can also use LY, which will take the latest year of data available. But I recommend TTM because it takes the trailing 12 months. That means the financial performance for the last 12 months. So for the operating cash flow, it would take the past 4 quarters of the operating cash flow of that company and then divide it by the number of shares for that period as well. So in this case, what we're gonna do is we're gonna lock in B1, so that way we could drag this down. Click enter. As you can see, we get the number right away. If you double click here, it's going to autofill the formula. So now we have all the different operating cash flow per share values for all the different companies. And now what we could do is directly look at which companies make the most operating cash flow out of the bunch. This could help so that we could spot some potential opportunities to invest in any of these companies a lot faster. Most importantly, what I want to share with you is a very useful way of comparing the operating cash flow per share, and that is to compare it with the current stock price of the company and see what is the price to operating cash flow multiple that the company is trading at. I'm going to explain to you that a little bit better in a second, but first I want to show you how you can get the stock price for all these different companies. So this time you're going to use the wise price function. You can see how it works here. And now we're going to do equals wise price. You can do symbols. So in this case, we're going to enter all of these different symbols or tickers. And then it's asking you for a parameter. The parameter in this case is the price. And this is going to give you the live price for this data right here. Click enter and you're going to get the stock prices right away for all these different companies. So that's great. And now we can compare the price with the operating cash flow per share for each company. So the way that you do that is very simple. You take the stock price divided by the operating cash flow per share, and this essentially tells you the multiple at which each of these companies is trading at. So if we double click here, it's going to autofill for all these different companies, and now we can see which companies are trading at a lower multiple than the others. So in this case, look at this. This is interesting, 7.22. We could explore that further. We could also look into these companies. Now, the one thing that you do need to keep in mind is that some of these companies may have a lower quality than some others, and that may be the reason why they're trading at a lower multiple. But again, that's for you to be able to do your own research. This just allows you to spot investment opportunities faster. One way to look at the multiple itself is how much are you paying in terms of an operating cash flow for that particular company. So in this case, you would be paying 13.76 times the current operating cash flow for this particular company. That's the way that you would look at it. Obviously, the more that you pay for a company, the more risk you're essentially taking, because that essentially limits your potential return. And the lower you pay for a company, it's generally better. However, you may pay a very low multiple for a company, and then that company has a lot of risk, goes bankrupt, and then you're left with nothing. So you do have to keep in mind the quality of the companies that you're investing in when you're considering any type of multiple. One more thing that I want to share with you is the difference of the operating cash flow per share with the earnings per share. So the earnings per share is a very similar calculation to the operating cash flow per share, except the difference is that you would take, instead of the operating cash flow, you would take the net income of the company. So if we were to do that, we would go to the income statement, we could zoom in, and all we would need to do is take the net income and then divide it by the number of shares, which in this case we're going to use the weighted average shares outstanding, and that essentially would be the earnings per share. And you can see that it's exactly the same as the number reported here on a historical basis. And the cool thing about this is that obviously with Y sheets you can also compare that as well. So let's say we're going to do this, and here we go. We're going to change this to EPS, make it a little bit smaller, and then we're gonna also add a multiple column. The multiple column is going to be, well, first we're gonna get the EPS itself. So again, use the wise function. Here's the symbol, parameters. In this case, we're only getting one, and then the period is gonna be TTM. We're gonna lock this in so that way it gets it for every single cell. Okay, great. This is the EPS. We're gonna turn it into 2 decimal places. Change the formatting. Here we go. Now we get it for all these companies. And this is another valuable way to compare companies because you can do this across many different metrics. And now we can do the multiple itself. So the multiple itself is gonna be the price divided by the earnings per share, and this is also known as the PE ratio. And now you can see in this case for this company you would be paying 23 times the earnings per share or the net income of the company. Click here, autofill, change this into this format, and now this allows us to have a more complete picture and analysis because now we can compare the different multiples across each other, and this gives you a good idea of why certain things may be happening as opposed to just being able to look at one metric itself. So this gives you a more complete picture. Here you can see that we're getting a low multiple here, but here in this case it's a much higher multiple. So this is a good balance and a good way of looking at potential investment opportunities in one particular industry. One last thing to keep in mind when looking at the operating cash flow per share is that this number heavily depends on the number of shares outstanding. So if we go back to the formula right here, the higher the number of shares outstanding that a company has, the lower the operating cash flow per share is going to be. And this is why it is very helpful to look at the multiple analysis, because sure, if a company has a ton of shares outstanding, then obviously the operating cash flow per share is going to be lower, but so will the stock price, because the more shares you have, the less the value of each share. So therefore this is a good way of analyzing the operating cash flow per share on a multiple basis, same as the PE ratio, because this essentially nullifies the effect of a greater number of shares outstanding. Now you know everything that you do need to know about the operating cash flow per share, how this metric is calculated, why this metric is useful. If you have enjoyed this video, make sure to subscribe and turn on the notifications on so that way you get notified every time we release a new video like this that's gonna allow you to take your investing game to the next level. I'll see you in the next one.